So top of the morning, and I feel like we do this almost every morning, but top of the morning is Greece. Again, I'm sorry. So
Thank you for the apology.
European bankers and officials are kind of playing down what a Greek default might mean for the wider Eurozone economy. They're doing that because it looks like we're not getting any movement on a deal whatsoever, and we have that big June 5th deadline looming over Greece.
So you don't believe the Greek finance minister, Yanis Varoufakis, that there will be a deal by June the 5th?
You know what? I read the op-ed. I wasn't quite convinced, but maybe he'll surprise us all.
John, this is his op-ed in Project Syndicate.
That's it, right.
What do you think, John?
I honestly, and this is going to sound glib, I don't think it matters, right? It matters to Greece, and it probably matters to some of the periphery countries, but this has been a headline for a year plus now, and I think the markets are reacting the way they should react. Everyone knows about it. A default, while damaging to the Greece economy and Greek reputation, I don't think it's a big deal for the markets.
Can we say at this point that it's priced in?
I think it's very priced in. Yeah.
Really?
When it's in every newspaper around the world, it's priced in.
It should be.
Yeah, it should be.
All right, Tracy, matters to you, doesn't matter to John. Let's try you next.
The second one, maybe this will be more interesting. This one's thrown in for variety. The International Monetary Fund is saying that the Chinese currency is no longer undervalued, and that could be a big deal because, as we all know, China has been trying to get reserve currency status for a long time.
John?
I think this does matter in the long run. I'm not sure it's a short-term market mover, but over the long run, I think China is moving up from a developing country to a developed country. Getting reserve currency status is part of that process. So I think this is a step in that direction.
Now, I just want to throw out one number. So Standard Chartered estimates that $1 trillion worth of assets could switch into the Chinese currency over the next 5 years if they get reserve status.
Now, is reserve status conferred by being part of the strategic drawing? Is it the SDR is strategic drawing?
Correct.
Yes.
Correct, it is.
Does that confer reserve status, or does it? Is there more than that?
I think that's right. It should be noted, though, that there's a bit of a difference of opinion, to put it politely, between the U.S. and the IMF on this issue. So the U.S. still very much thinks that the Chinese currency is undervalued. The IMF is the one making noises on this.
All right, what is your number 3? The weather is perfect out. The markets are green across the board. What's going to keep people in their seats and not picnicking in Central Park today?
Hopefully people will find this interesting. We have a bumper day of U.S. data. So we had durable goods, capital goods orders were a bit better than expected. Next up, we have Case-Shiller, house prices, we have new home sales, and we have that all-important consumer confidence.
John, what data point matters to you most?
I think between the two this morning, the one that matters the most is Case-Shiller. We saw really strong housing starts last week. We've seen very strong household formations. And I think everyone's been missing sort of this pickup in housing, which was such a strong contributor to growth back in the 06-07 timeframe, maybe too much of a contributor. But we see that leading to better second half growth. I mean, the multiplier effect of housing is really amazing, right? You buy a house, you need furniture, you need gardening, you need all the other things that go along with it. And that has a really, really strong effect on employment and prices.
So to what degree, though, one last question before we have to run to Julie, are higher home prices a barrier to household formation?
I don't think so. I mean, I think there's been a lot of pent-up demand, right? The savings rate has been going up. Household finances are in the best shape we've seen in years. And I think people have finally, that rising household prices, while it might slow down a significant increase in house price appreciation, is good for household finances and the rest of consumer spending. So I would look at it as a positive for the U.S. economy.